As always, everybody, for the Monday webinar and kind of our weekly planning watch list and so on, happy to be with you guys. Happy to chat about what we have going on in the week ahead. Oops, hold on here. And as always, I want to hear your thoughts. I want to hear what you guys are looking at, what you're interested in, you know, what you think this market's up to, all of the above. And let's discuss. Remember, there's no bad ideas, there's no crazy ideas, there's nothing. There's just us trying to, you know, use the best information we have available and see if we can piece together, you know, what these markets are up to. So again, welcome everyone. Good to see you all. Hey, Brian, good to see you, my friend, and Chris, good to see you guys. Welcome everybody. So again, last week was a little bit, hey, Patty and Roy, good to see you all. Good to see you guys. Last week was a little bit of an off week because I was on vacation, but we're back. We're back in action. So looking forward to kind of just putting the framework back together, seeing what these markets are up to. There's a reason that summer is a good time to go on vacation, because oftentimes summer markets can get a little bit quiet. And we had all that crazy volatility a couple of weeks ago, and things have kind of calmed a little bit, and we've had a lot of sideways movement, and everyone's kind of waiting for the next, you know, the next move, the next thing to happen. What is the date today? The 19th. So we're coming to the ending point of August, and we're going to start creeping back into kind of the non-summer markets. Summer can be really sideways, really boring with kind of bouts of volatility. Sometimes we can see summer just trend like crazy. That's pretty rare. Most of the time we just see kind of those sideways markets all summer long, kind of June, July, August, with those little kind of pockets of volatility where things go a little bit crazy, which we've definitely seen a bit of this summer. But for the most part, it's a lot of sideways movement. But as we come out of summer and we get into kind of this September, October time, we usually can see the markets really start to take off and really start to move, which is good. And we're coming into that period. We're kind of looking for kind of what the next big moves are and kind of where everything's going to head. So that's what we're going to talk about today. And specifically, of course, this week and what's going on. As far as news goes, let's talk about news for just a moment. And again, I want to hear your guys' thoughts. I really do want to hear your guys' thoughts and kind of what's going on in your minds and so on. Okay, so this week, not a super heavy news week, but this is a time I pay a lot of attention to this right here, right? Jackson Hole Symposium. This is where all the central bankers get together and talk about, you know, stuff, right? And it's not necessarily open to, you know, we don't see streaming stuff on C-SPAN or whatever. Is that still a channel? People still watch that? But you know, we don't see that kind of stuff, but it is pretty open as far as, you know, there's you know, the news is there, and they kind of share the headlines with us as the symposium goes on. And this can be, you know, I've seen huge movements start, like massive movements start in the currency market from this Jackson Hole meeting. So again, central bankers from around the world get together, talk about, you know, global economic policy and all of that, and it really can get it can really super get things moving. So it's kind of interesting. Mel, good question. I think they have. I think the day one is probably more considered this type of a situation. I'm sure it's yeah, there it is, Thursday. So they kind of don't they kind of don't make it, you know, as high impact of a situation as normal. And I only show usually the high impact news announcements. But yeah, day one is Thursday, and then day two is on Friday. So, you know, again, it's not necessarily like a news announcement. It's not like we're watching non-farm payroll or interest rate news. You know, it's not like at a certain time of day we're going to see things really start to crank. But we do see we do see, some movement come out of this, because sometimes we get some of that monetary policy insight that we've kind of been waiting for, looking for, and so on, and that can get the markets really, starting to scoot, end of the week, start of the next week, that kind of a thing. Do we have a day three? Oh, let's go back to that for a sec. Is there some day three in there? Oh yeah, yep. So it's a Thursday, Friday, Saturday kind of an event. So yep. Again, that is that's kind of coming up on the weekend, and we'll see how that goes. But we're not necessarily waiting to do something until this happens, but we're just paying close attention to this whole thing. And it gives us a pretty good idea of interest rates and some of that stuff. So yeah, exactly, Dorothy. Yep, it's good. It's a good point you bring up. Yeah, definitely going to be interesting to kind of see what they say about all this. After that weird interest rate cut we had in the U.S. The hawkish interest rate cut, which is the craziest thing ever, but it happened. We cut interest rates, but in a very positive manner. So the market was like, what? So anyway, that was kind of a wild event in the U.S. And of course, we have the inverted yield curve, which is the topic of every news site and everything right now. It's just totally nuts. So that's all kind of everyone's looking at is that inverted yield curve, and there's going to be some good things to watch from there and kind of see how that goes and so on. So yeah, definitely there's going to be probably some decent discussion about those factors in this weekend. We also have FOMC meeting minutes on Wednesday, so there's going to be some stuff going on there. We've got monetary policy, same thing, meeting minutes for Australia in about 12 hours. Some CAD news, a little bit of Euro news, nothing too crazy there. Retail sales for New Zealand, a little more CAD news. So it's not a super busy news week, but it could potentially be a heavy news week. So that's going to be kind of the thing to look at. Okay, so all of that in mind, our goal, as we have discussed so much, over the last several weeks, and as we discuss constantly, the goal is to kind of figure out, what is the market super excited about? Are we a risk on or risk off market, right? Are we seeing, major Swiss franc and yen strength? Are we seeing weakness on those? And and where are things headed? The VIX is something I always love to look at. Remember, this is the volatility index. This kind of gives us a little peek into the major, underlying tone of the market, right? If the VIX is high, people are panicked, right? And we see that pretty directly impacting and pretty immediately impacting the stock market, the currency market, so on. So we did have some wild moments, right? We had going into the end of July, that was the interest rate situation where everything just went totally bananas. And, the VIX was high and it pulled back a lot, and it shot back up again and it's pulling back. And so it's kind of, we kind of see a little bit of a range here in, kind of in this 17 to kind of 25 area in the VIX. So definitely getting this back down into, back down below 15 would be a pretty good thing. And that kind of gets everything back into kind of that calm, steady movement. But, we could stay a little bit in the upper range for a while, right? There's enough uncertainty right now. The VIX is coming down, but there's enough uncertainty that I don't know that we're going to get it all the way back down into these lows immediately, right? It'll likely happen at some point in the near future, but I think there's enough uncertainty that we might see a little bit of this happening for a while before we get that big move there. So remember, the VIX just helps us, if the VIX is high, we see risk aversion, right? We see kind of a risk off market, and risk off markets are, yen strength, Swiss franc strength. The dollar kind of gets slapped around a little bit in a couple of different ways. So the dollar, oftentimes, U.S. dollar, with a high VIX, we oftentimes will see some dollar strength, right? We'll see that that kind of safe haven element um, is definitely, you know, moving and so on. But the dollar has kind of separated itself a little bit over the last year or so from kind of the typical safe haven movements, right? We've seen, you know, Swiss franc and yen strength, and we don't always see dollar strength, and we've seen weakness on those, and we don't always see dollar weakness. Those three used to, you know, move pretty tightly together: U.S. dollars, Japanese yen, you know, Swiss franc strength or weakness together, because they were kind of that safe haven, you know, risk on, risk off, right? If the market's confident, those things, those elements are weak. And if the market is panicked, then those tend to strengthen. But the dollar has kind of separated itself a little bit, as we have, you know, a lot of this other, you know, other things involved, like China trade war and that kind of stuff. And since the dollar is kind of directly impacted there, it's you know, it's gotten a little more separated, I guess, from the typical safe haven type movements. So there's that. Of course, everybody is talking nonstop about the yield curve, right? And the inverted yield curve. Is everybody clear on what that is and why that's important? Anyone have questions about that? We can talk about it for just a moment. But is everyone kind of keeping a half of an eye on the yield curve? Anyone unfamiliar with what that is? I'll give you a little bit of a scoop here real quick. The yield curve is supposed to be a pretty, okay, Kendall, all right, okay, Patty, yep, we'll talk about it. Mel, yeah, roughly. And honestly, I'm not an expert on this, but it's definitely, you know, it's something that as traders, you know, we need to be aware of and we need to kind of watch and so on. So what the yield curve is this chart right here is 10-year Treasury yields, U.S. Treasury yields, right? And so this is what, you know, if you buy Treasuries, this is what they're paying you out, right? If you put your money in some Treasuries, they're paying you out, you know, this amount of money. So these are the yields, right? Not the price of Treasuries, just or you know, any of that stuff. It's just the yields, right? What they're paying you for holding U.S. government bonds. So when the yield curve gets inverted, these are 10-year yields, right? And you can kind of see that a little bit more there. 10-year yield. So if you buy some 10-year bonds, this is what they're paying you out. Well, what typically should happen in a healthy, normal, fine-feeling economy and so on is long-term yields should pay you out more than short-term yields, right? That means that, you know, yeah, you want to get some short-term money out of it. You're going to make less than the long-term because you get paid out sooner, and it's also kind of become a factor of market health, right? So if we're getting paid less interest on short-term yields than we are on long-term yields, that's kind of a sign of just a normal, healthy economy, right? We think that things are fine now, but in the long term, we still have good confidence, right? And so that's why we make more yield in the long term than in the short term. But when that gets inverted or turned upside down, so to speak, and the short term, which would be like the 3-month yield right now, so you can see the 3-month is 1.88%, whereas the 10-year is 1.6. So it's not hugely, you know, it's not hugely off. But when that happens, that basically means that the market is telling us, well, things are okay for the moment, but for the long-term picture, we expect a decline. We expect things to be worse in the long term than in the short term. When we have higher yields in the long term than in the short term, so opposite of what is happening right now. Right now, short term is paying more than long term. When it's the opposite, it means, yeah, things are okay now, and we also expect things to be okay in the long term, over the next 5, 10 years, whatever. And right now, the market is kind of telling us we're a little bit uncertain about the long term, and so, you know, short term is paying out a little bit more. Does that make sense? So when that happens, now remember, you know, this is the market kind of trying to price in, you know, what is anticipated, right? And of course the market can be wrong, and traders can be wrong, and so on. And this, what you'll hear constantly is when the yield curve gets inverted, when we're making more on the short-term bonds than the long-term bonds, that's a sign of recession, right? That's a sign where the market's getting ready to take a dive, and we've had a yield curve inversion before most major recessions over the last many, many years, right? So there's that. The other thing, though, is oftentimes when these yield curves get inverted, there can be a recession, but oftentimes it's a couple of years down the road, right? And this has been a little bit inverted for the last little while, but oftentimes it's not exactly an immediate sign that the market's going to fall apart and that we're headed into recession and that things are going to crash and so on, right? It's just kind of a little bit of a heads up of how in general the market is favoring short-term stability versus long-term stability. And the reason, again, that that's important for us is, as we see major instability, then we start to trade safe haven currencies, right? We start to trade Swiss franc, we start to trade Japanese yen. As we see that fading and subsiding, then we start to kind of trade against those things, right? We trade, some of the higher, considered higher risk type currencies. So that's why it's important to us. With big market panic, we're looking for those safe haven currencies. When things kind of make a comeback, we're looking for more of those risk on type currencies, trading things like the Aussie dollar, New Zealand dollar, and some of those other ones. So that's why it's important for us as currency traders to know, we don't want to be blindsided by the market. I talk about the setups that we look at, and we're looking at long-term levels, and we're looking at big targets and all that stuff. And that's always very, very good. But we also need to know kind of, what's the general temperature, so to speak, of the market, right? How's the market in general being viewed by everyone everywhere? And so that's also helpful for us. Yeah, Bob, for sure. Yeah, there's a lot of the political side of things is definitely affecting things. Trump and I know we've got elections coming up again and all that. And so markets really hate uncertainty, right? And so oftentimes things get a little bit tricky, going into elections, right? Who's going to get elected? What's going to be their outlook on international trade and blah, 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 and so on. That's why, when Trump got elected, for example, we saw that huge move, right? We saw the market go nuts for months and months after Trump got elected. And it was really, more just, okay, now the market knows what to expect and let's go kind of a thing, right? So it's just markets don't like uncertainty. They don't like, elections are always kind of tricky and all that stuff. So that's a little bit of the framework of everything. Does that make sense? You guys following me on that? Is that all coming together all right? So as we look at all of that stuff, then we have to decide, what are we going to try and trade, right? What are we going to try and kind of look at here? Bo, is there a reverse correlation with VIX and treasuries? Yes, yeah. As the VIX goes up, we usually see those yields go down, because remember, treasuries are the safest thing you can buy, right? And the more panic the market gets, the more those get bought, and the more the more demand there is, and the less the yields have to be, right? It's a total supply and demand kind of a situation, right? If markets are panicked, everybody buys U.S. treasuries, because that's just a guaranteed safe investment, right? It doesn't pay you much, but it's the safest thing. It's like, you either put your money in a savings account or you put your money in U.S. treasuries, and treasuries will pay a little bit more. Not much, but a little bit more. And so that's a sign, when money starts moving into treasuries, that is a sign that that, things are kind of panicked. And so the VIX will go up and yields will go down because demand for treasuries goes up. Does that make sense? That's kind of a tricky sentence there, but when people are buying US treasuries more, there's big demand and the yields go down. When the market's really, really confident and nobody wants to own treasuries because you can own stocks, you can do all of that stuff, then yields will go up because the government still has to finance their excessive spending problem, US government. And so they'll say, okay, we're going to pay you a little bit more to own some treasuries because we need to sell some. So when demand goes down, those yields go up, right? They'll say, hey, we'll pay more for you to buy treasuries because we need to sell them because we need to make money, right? Does that make sense? Everyone good with that? So yes, definitely a kind of an inverse correlation there with the VIX for sure, and gold prices as well. So gold is kind of an interesting thing, and and this is definitely kind of a discussion of what is the market feeling and thinking and so on. Gold is a really volatile, emotional kind of investment, basically, right? The old timers, so to speak, kind of always looked at gold, and I'm not talking just about, the older generation, but the old timers, like the old Wall Street, right? Buy gold and everything will be fine, right? Gold's the safe thing to own. And it's kind of definitely turned away from that, right? I think as gold got into these higher prices, when gold was down at, $300 and $400 and $500 an ounce, it was a different story. As gold got into these higher prices of, 1,500, 2,000, the highest area we saw gold right here was 2011, right? Gold was up at $1,900. As it got into these higher prices, gold became a kind of a less stable feeling kind of investment, right? And so gold's kind of, I watch gold and I keep an eye on gold, but I don't trade gold so much because it's really finicky on how it reacts to kind of the typical market situations. And since as U.S. Currency traders, we used to be able to trade gold just through our Forex platform, and now we can't do that. And so I've kind of, I always watch gold and I always look at the setups, but I don't spend as much time on it just because, most can't trade it on their regular currency accounts anymore. But it is important to watch for sure. And you're right, George, you're absolutely right. Yeah, gold's got a ton of missed targets down below. It's gotten pretty overextended. It's gone pretty nuts for sure. So gold made this crazy wild rally. But gold reacts fairly well to kind of these target zones. We've seen it breaking some highs. We saw it struggle, back over here. Now it's headed in kind of this 1550 target. We've got some other big targets up here at 1650, and then some big resistance up here just shy of 1800. So, big rounded bottom pattern here, breaking resistance. So gold's on a bit of a move, but it is getting a bit overextended. You're exactly right on that, George. So yeah, we've got some big targets down here below. So we'll see what gold does. We'll see how this kind of plays out and where everything goes here. But definitely, we're watching these treasuries. We're watching the VIX. We're watching the dollar index. The VIX is coming down. Treasuries are kind of taking a little bit of a breather. The big 10-year yields right here. The kind of the bigger, longer-term treasuries here. Yields have been coming down for a while, right? And specifically, we had these yields way up high over here in October, right? October 2018, October last year. And that was kind of when the stock market started to fall apart, right? Remember how we had that big sell-off October, November, December of last year, where, we saw the S&P and we saw pretty much all the stocks just kind of fall apart. And some stocks, big, massive stocks like Amazon and Apple and so on, took like 40% hits, right? And so the market got panicked, yields went down, everybody started buying treasuries. They said, this is it, this is it. This is the big one right here. And so treasuries got bought up like crazy the last quarter of last year. But now treasury yields are down to, really kind of 10-year yields are down to basically an all-time low. They're not quite there yet, but we're reaching all-time lows on these 10-year treasuries. In fact, I just read that the government, the U.S. government's thinking about selling 50 and 100-year treasuries now to kind of get the yield under control. because it's selling off pretty hard. But this is a big decision point, right? This is a big spot to say, okay, is the market still panicked? Are we ready to make a move now? And so that's kind of the interesting thing. We've seen, as this kind of a thing happens, my first thought, my just gut instinct is the stock market's going to rally, right? Stock market's going to take off and go somewhere, because as these kinds of things happen, as everyone kind of panics and jumps out of everything, as people jump out of stocks, there's nowhere to go but up, right? And I feel like the way that's going to affect the currency market is as these long-term 10-year yields hit these big lows right here, it just seems like this is a great opportunity to see that risk on market happen again, right? But we're going to have, like we've talked about, we have that uncertainty of elections coming up, and China trade war. That's been dragging on like crazy. So as we kind of have this situation right here, there's going to be some uncertainty, and I don't think that yields are just going to come jumping off this low like crazy. But I think the panic has kind of reached an inflection point right here, and we're going to see some decisions happening here. And this is why I like things like the Japanese yen and the Swiss franc. And again, the dollar is going to be a little tricky because of this China deal. That's a big deal for the dollar. But I think that as the stock market kind of calms and cools down and we start to get some good movements again, I think it'll be time to jump back into yen and Swiss franc pairs. We're going to look at those. Okay, big discussion on that. Hopefully that wasn't too boring for you guys, but that's kind of the big picture of what's happening, or at least what I see happening in the overall market right now. Because again, stocks, currencies, political stuff, interest rates, these are all correlated. These all work together. And the days of just saying, I don't care what's going on anywhere, I'm going to buy the euro dollar, right? We can't do that. We got to make sure that we understand what the big picture is, and and that keeps us on track. Okay, everyone good with that? Any questions? Any thoughts? Anything? So, okay, as long as everyone feels okay with that. Going back over here, we're just watching this crazy, ridiculous dollar index be such a son of a gun. It's just being so nuts. And it just goes up and down, right? It's just going up and down. The dollar index is going to have a major breakout at some point in the future, whether it's tomorrow or in 5 years, I don't know. But the dollar index is going to break out and make a big move. It's been very, very channeled for quite a while now. We've seen this kind of a movement here, and really it's kind of been in this big sideways channel for the last couple of years, 2.5 years or so. And so it's been really kind of interesting. We had that big sell-off there. So we had the big sell-off, and we saw things looking really good there. And then we've kind of had this return. The dollar index is making this run back up again. And so we're just saying, okay, where's this thing headed? Short-term chart targets are always interesting to watch. We've got a weekly pivot here and some daily pivots, and a few little minor market imbalances, but it's really getting very, very sideways and very channeled. So 98.50-ish to 99 kind of remains, a pretty important area. Of course, the dollar index could revisit that 100 because that's just a good old round number. Here's 100 right here. It's just, anytime we have those big, kind of psychological levels, we could see that, that happen there. And we're looking at this, in relation to our euro dollar trade. But I also want to see if we can trade things like maybe the dollar Swiss franc, and can we trade things like dollar CAD, and obviously the Aussie dollar and the New Zealand dollar. These are going to be some big ones, and so we need to kind of know what's going on here with this dollar index. And right now, it's kind of in this major resistance zone, and we're just kind of waiting to see where it goes, what it does from here. The 200 moving average has been a big one for the dollar index on the daily chart. So since it got above in April of last year, so a little over a year ago, it got above there and has just stayed above that moving average. We had a little dip right here, and then it's just staying above that moving average. To get a kind of a bigger movement below that 200 moving average would be would kind of signal that longer term trend turning. But we're at, big decision point in the high 90s, slash 100 area. This is where we just say, okay, let's see where things go from here, and watch the signs and the signals. But I still remain, as we have all these big targets down here on the dollar index, I still remain bearish US dollar. Still bearish US dollar. I think we're going to get that move down. For now, maybe for the next week or 2 or 3, we're just going to see some sideways chop, and we can look for some range trades there. But long term, I'm still holding onto that bearish move for the US dollar. It might head up a little bit more, but I think ultimately we're going to get that big run down. Okay, everyone good on that? Make sense? Está bien. So let's talk about a couple of dollar pairs as we look at that. We've got some dollar trades going on right now. We've got euro dollar that we're looking at. And so as we're looking at this dollar index here and some of these other dollar pairs, we're saying to ourselves, okay, what's going on? Remember, the euro dollar and the dollar index are kind of a mirror picture of each other. So that's kind of what we have going on there. So obviously, as the euro dollar is heading down, the dollar index is heading up, and these charts look pretty much the same, right? The euro has been failing at the 200 moving average over and over again. And as the dollar index has the 100 level as a major resistance, the euro dollar has 110 as a major support. But the only kind of situation that has me a little bit on the rails with the euro dollar is this French election gap all the way back here. It takes us all the way back to 2017. I remember this, closely happening. It takes us down into kind of the 107, 108 area. So if we do make any kind of, significant run below 110, we're probably headed into 107, 108. But I'm just not really planning on that yet at this point. I don't know that the euro dollar is headed back down into this big 104, 105 area. We've got this huge channel, and we're kind of at the midpoint where there's all this kind of resistance here and support over here, big psychological level at 110. So that's why I like euro dollar long, right? The question that I always ask myself whenever I'm in a currency, whenever I'm in a trade, whatever direction I'm in, I ask myself, would I feel better being in the other direction? And if I do think that, then I start looking at it very, very closely and saying, okay, what if I missed? Am I off? Am I wrong? What's going on here? And for the euro dollar, I don't feel that way, at least at this point. I don't feel like, geez, I feel like I'd rather be short euro dollar than long. I don't feel that way. I feel like we're at a major decision point. If this does, keep pushing lower, then we may need to reverse our position. But at this point, I feel like I really like this direction. And even though we've had this big bearish trend, actually not even though, it's really because we've had this big bearish trend, I want to be long, right? So that's a big thing. We saw the euro dollar kind of bouncing around and topping out over here early 2018, right? So a year and a half ago, the euro dollar was topping out in the 120s. And here we are down at 110 a year and a half later. Would I want to be bearish? Would I want to be looking to get bearish a year and a half into a downtrend? No, not at all, right? And so that's a big thing to look at is as we get these long-term, runs up and runs down, we want to find reasons to get into the new trend. And that's where I think the euro dollar has some new trend and some new direction to trade this, to trade this higher. And that's why I'm bullish euro dollar where I am right now, because a year and a half, being at 125 and a year and a half later being at 110, 1,500 pips lower, makes me think, yeah, that's the direction we should be trading. Not only just, hey, we've been heading down, that's what I'm looking for, but we've got major targets up here. This whole area is full of big targets for euro dollar. We're coming into major support, all of that stuff. So that's what I like about this euro dollar. What do you guys think? Does anybody have any thoughts, any questions about euro dollar? We've got two positions here that we're just kind of nursing and just kind of letting play out. But overall, I like that it's kind of testing and pounding on this 110 area, and I think that we could have a nice opportunity to get a third position on euro dollar, a third buy position. What I'm looking at in kind of the short term is, we've got a couple of missed pivots here. We've got a weekly pivot up here, not too terribly far, daily pivot. If we go back here just a little tiny bit, you can see, going back here, we've got some other nice targets, market imbalance. So of kind of the immediate targets on this immediate run down from June to this, bottoming out here in August, we've got, a weekly pivot, market imbalance, another weekly pivot. So I'm just looking at that saying, yeah, I probably do want to get long again, euro dollar, maybe just a little tiny bit lower than current price. So that's kind of what I'm looking at for the moment. So euro dollar will make its way back up into the mid-teens for sure, 114, 115 area, 116. And so our goal will be just to be on board for the ride and make sure that we're kind of managing our risk and managing our exposure. And if we got to kill a trade to stay in for that run up into the mid-1 teens, let's do that. Let's manage our exposure to that. But I will sit in euro dollar as long as I got to sit in it. I'm not gonna, I don't want to let this thing make any kind of run down into that 105 and be along for that. But 110 is going to kind of be our make or break area, I think. That I'll be watching really, really closely on euro dollar. So yeah, we'll be looking for an opportunity to buy some dips on this, and at least get back up to some of these market imbalances at 112.50 for the short term. Back up to some of these market imbalances, 112.50. We've got 111.50. We've got weekly pivot up here, 113.75. So some of that stuff. Make sense? Any questions about euro dollar? Everyone good with that? Everything coming through all right? So that's euro dollar. Other dollar pairs. Watching New Zealand dollar. Remember, New Zealand and Australia will kind of represent the definite risk on kind of currencies, right? The market's feeling really confident. We'll see things like, New Zealand dollar, Australian dollar running up. But it doesn't change the fact that we need to be coming off some pretty solid areas and pretty solid zones. There's a nice little double bottom here happening on New Zealand dollar. At this 64 kind of 100, 64.50. Our next level's down here about 6,200. And 6,200 on New Zealand dollar takes us all the way back here to 2009. So, we're not super far away from 10-year lows on New Zealand dollar. So again, anytime we can trade around super long-term highs or super long-term lows, it's a really good thing. So New Zealand dollar sitting at these kind of sitting at this short-term support, or medium short-term, last year or so, but long-term support's not super far away. So, that's where I'm just saying this just strengthens the case that I'm trying to make of let's trade some dollar weakness, right? U.S. dollar weakness. Dollar weakness might not be 100% ready just yet, but it's absolutely getting there. New Zealand dollar's got some really, really great targets up above, market imbalance, tons of missed pivots, tons of market imbalances all through this whole area here. So for me, I think New Zealand dollar's got to get back up to at least 6,800 before I'll feel like, all right, it's fine, it's moving, it's going, and so on. So I like New Zealand dollar for that. It's coming up into 10-year lows. I like the Australian dollar. We've talked about this one a lot. We'll talk about the Aussie dollar a lot more, but just kind of stay on the tone of dollar pairs. The Australian dollar sitting at, again, pretty long-term levels, 10-year support levels. We go back another year and it takes us down another few hundred pips. So there's that kind of wild card there. So we're going to keep an eye on this Australian dollar. But, you know, as it sits at 10-year lows, that's a big deal. That's a big deal. Euro is you know, in some pretty big areas there. Another one that was getting my attention is the dollar Swiss franc. Look at this long-term dollar Swiss franc chart. By the way, we will trade this pair very little in the group because it is the slowest. If we ever get into a dollar Swiss franc trade, we just have to plan on staying in it for like 6 months. Because you see this kind of movement right here, right? This is 2015. You know, we had the big Swiss National Bank panic, pulls back, and then, you know, the dollar Swiss franc just kind of bounces between about 95 and, you know, and 102. You know, kind of a it's basically been in a 1,000 pip channel for 5 years, and that's pretty boring. But the thing that I do like on dollar Swiss, I'm not necessarily looking to take a trade here as much as just use it for a gauge. Dollar Swiss is at a pretty big decision point, right? This is a long-term, this is 2011, so we're coming up on, you know, quite the long-term trend line. 2011, bump, bump, bump. And we've hit that trend line and come off it pretty nicely right here. And there's, you know, there's not much of the exact support levels that we want to see, but the reaction off that trend line was pretty awesome. So that's telling us, you know, let's see what's happening here. Swiss franc is, you know, is pulling back a little bit. The markets are kind of getting a little bit away from that total risk off movement, and we might see that happening there. So dollar Swiss franc is at a big decision point, and that's, you know, that's going to be a little crazy there. Dollar CAD, you know, dollar CAD's kind of in the middle of everything right now. So dollar CAD doesn't give us too much, you know, in the way of dollar strength, dollar weakness. So we have a little bit of a dollar strength case on dollar Swiss. We have dollar weakness on, you know, New Zealand dollar, Australian dollar, euro dollar, pound dollar pairs. And so, you know, we're kind of leaning towards the majority here, right? Where's the big targets? Where's, you know, where are the currency pairs kind of leaning towards, you know, one direction or the other most? Dollar strength, dollar weakness. And, you know, for the most part, it looks like dollar weakness is still kind of the game to be had here. So just looking at those targets, looking at those long-term levels, looking at all the various currency pairs, that's where I'm kind of deriving, you know, all my information. What do you guys think? I've been chatting nonstop. Obviously, I take a week off of webinars, and I just have a million things to say. So I don't want to just make this a 100% one-way conversation. How's everybody feeling? You guys following along? Is there anything unclear? Any questions? Anything? You guys feel like do you feel like you have a better picture of what's going on? Was the yield curve stuff helpful? I mean, where's everyone's brains at for a second? Give me an update there. Thoughts, questions, comments, anything? Okay, all right. Good to see you, Graham. Happy to have you with us. Okay, good. All right, little yield curve action. Okay, helpful. All right, good info. Okay, thanks, guys. Thanks. All right, I just want to make sure this is making sense, right? This is a little bit more of, you know, how we look at the big picture, right? And then once we have the big picture in play, then we can start to kind of pull trades out of that, right? But we've got to have that big overall situation working, and then, you know, and then the trades come from there. Okay, yes, lot to say. Okay, thanks, guys. Thanks, glad it's helpful. Glad. Okay, very good. Norbert, that's a good question you're asking. How to protect euro position, some kind of hedge. You know, you could hedge, and that's something, you know, it's something I'll think about a little tiny bit more. The dollar Swiss franc could be a euro dollar hedge, right? Historically, dollar Swiss franc moves opposite of the euro dollar, but that changes a little bit with the dollar element that we have and the Swiss franc, you know, element. But the you know, going long dollar Swiss franc can be a big hedge on being long euro dollar. Does that make sense? So that's the first one that I always would go to. It's just, again, the dollar Swiss franc is such a slow stinker that, that we could have it may not be such an equal hedge. That makes sense, but that would be that would probably be the best bet. There's euro dollar, or excuse me, dollar Swiss franc to euro dollar would be the number one hedge option. But there's also the element of potentially the euro Swiss as a hedge as well. The problem with euro Swiss is it's hitting major support levels, so I wouldn't want to try to get short euro Swiss while being long euro dollar. So dollar Swiss would be probably my more of an option there. Norbert, yeah, and euro yen could be a good one as well. So yeah, euro yen could be a good one, for sure. So yeah, that could be kind of something to look at there. Euro yen's got some big levels down here, but they're several hundred pips away. So yeah, that could be kind of the the determining factor on kind of hedging that. So yeah, I would probably go euro yen, as a possibility, or dollar Swiss. James, fundamental factors seem to be more of a concern these days. What is your view on Brexit, no deal, in respect to the euro? Yeah, I mean, the euro, I don't know. Brexit has been priced into the overall market, I think, enough. Not necessarily to the pound itself, because the pound will be very, very subject to heavy volatility with a no-deal Brexit or whatever ends up happening with Brexit. But I think the rest of the market, this Brexit debacle has been going on for a couple of years now, for like 3 years. And so I think the market's kind of over it a little bit. So I don't think we're going to have a huge impact on something like, like the euro with Brexit. But I think we're going to have a ton of volatility around pound pairs, which is why we're not trading pound pairs. But I don't think we'll have a huge, I don't think the euro will be hit too hard with that. So, okay, good guys, good. Let's talk a little bit about good questions, good comments. Let's talk a little bit about some of these Aussie pairs. We have got an Aussie Swiss trade, and we've got a pending order on Aussie New Zealand. So those are kind of two things to be watching and keeping an eye on. So let's talk about some of these Aussie pairs here. Let's look at Aussie Swiss. So as we kind of painted the big picture, right, in saying, okay, I think that the risk market might be ready to come back, risk on, which would mean Swiss franc weakness and yen weakness. I don't think the risk market's ready to come back in a major force, but I think it's going to be kind of creeping back, right? And that's going to cause Swiss franc weakness, yen weakness. And so that's another reason I like this Aussie Swiss here. We've got some positions that are down a little bit on Aussie Swiss, but it seems to be holding pretty well, right? We're trading around major historic levels, right? We're trading off this double bottom from 2015, and then of course, depending on what chart you look at, which is really crazy that the Aussie Swiss specifically is so off with all these charts. Some charts have these little spikes lower. But for the most part, we're basically trading at all-time lows on Aussie Swiss, or at least 10-plus year lows on Aussie Swiss. So I feel good about that. We're seeing, some pretty decent reaction. It seems to be holding this level pretty well. Nice little double bottom right there. But we've got this range to look at on Aussie Swiss. So I have been less concerned about getting in at this perfect double bottom here, although that's, some nice pips, right? That's 100 pips from this high to low here. I've been a little less concerned about buying that dip and a little more concerned about, or a little more interested in kind of buying the breakout, right? So I'm watching this Aussie Swiss, and I just feel like as long as it stays in this channel, this sideways channel between about 66.50 and about 65, 30, 40, 50 area, I kind of don't want to be in that too much. This is a great opportunity for those of you that want to do a little bit of short-term trading. Maybe you don't have an Aussie Swiss trade, or maybe you're just kind of looking to kind of offset some of that Aussie Swiss. This will be a great area to do some range trading on your own, right? I usually won't do this for the group because it's a little hard to get everybody in and everybody out. I just want to, make sure it is a fair playing ground for all. But for those that, when your time zone is appropriate, when it works and so on, as we get these kinds of movements, don't hesitate to buy Aussie Swiss off these lows and look for some short-term trades to kind of complement what we're doing, in the longer term. Even the Aussie Swiss moving down to that weekly pivot and coming back up is probably going to be, a couple of pips to be had in there, right? So there will be some range trading here, buying off these lows, and and looking to kind of trade up towards those highs should be pretty good. And you never know. We may end up with a pending order down here around these lows. It's possible, but I want you guys to be kind of watching that and trading that and setting your chart alarms and being ready to kind of do that. What I'm more interested in is getting the Aussie Swiss in this kind of area here, right? Getting it up above this channel. This has been our double bottom. This has been, that big resistance that's holding it. So as soon as we start really kind of clearing out that 66.50 area, I think we're going to start to see this just trickle higher, right? And so that's where I want to be buying Aussie Swiss. But it's holding on to those all-time lows pretty good. Very nice double bottom right here. The only target we have kind of lurking down here is at about 66.05, which is that daily and weekly pivot. We take that out, and I think it should hopefully be smooth sailing up into the 68s, 69s area. So that's what we'll be looking for there. So Aussie Swiss looks good on that. I'm gonna be watching it. Like I said, as we take out those highs on this one, we'll be looking for some opportunities to get long there. If it does make its way back down into 65, 50-ish area, we may look for a smaller group position down there to kind of complement and add to our existing trades on Aussie Swiss. So that's what I'm looking for there. We're seeing kind of a similar picture here on Aussie CAD. This one was a little tricky because it did take out these lows, right? We did kind of take out, that area there, and we're kind of stuck on Aussie CAD between 86 and that 90 area, right? And so as we sit here on this Aussie CAD, I think to myself, all right, we're sitting right at the 90 level. We're just 2 pips, 3 pips shy of the 90 level. If I'm just a little torn. I'm just torn on kind of what I want to do and how I want this to play out. But I think there's going to be some good opportunities here. We don't have a trade. Again, we don't have a trade on Aussie CAD. We did take a bit of a loss on Aussie CAD a couple weeks ago. And I want to get back into this for sure, but I'd like to see this get just a hair lower. I think we'd have a little bit of a better opportunity getting this down into kind of that 86-ish area. If we don't, then we're going to be looking to kind of take out some aggressive resistance levels and trade that breakout. So it's holding the levels. It's not, in major rally mode at the moment, but it's holding those levels. And I would like to get long Aussie CAD at some point in the future, right? And I think even kind of this 89 area, there's probably going to be some short-term opportunities off that double bottom to trade up into that monthly pivot. So if we look at like a 4-hour chart, something like that, watch this double bottom, watch this 8,900, look for a move up into 9,000. First of all, of course, just good old psychological levels, but look for a move into that 9,100 area. And we may do a trade in the group with maybe, a stop or something on it and see how that plays out. If we can get a move up into that 9,000, 9,100 from about 8,900. So I'll be looking for that on Aussie CAD for sure. Aussie yen, I actually like quite a bit as well. Remember, the yen pairs are falling nicely into line with, with the Swiss franc and kind of how that risk on, risk off market's looking. Remember, Aussie yen, excuse me, has bottomed out over here at this May 2009 lows. And we've had basically just tests of that the whole way through. You can see Aussie yen has had, the last couple of weeks have been bullish off those, that 70s/7100 lows. Been bullish off there. Again, we're kind of range trading through here a little bit, but internet connection unstable. Can you guys hear me okay? Everything coming through all right still? Video, audio, all that? All right, okay, just double checking, making sure. Good. So Aussie yen, as we've kind of had this, this big double bottom right here as well, and this looks very, very much like Aussie Swiss. So Aussie yen and Aussie Swiss, both kind of those risk on, risk off type market situations. If the market's feeling comfortable again, we should see Aussie yen move higher, Aussie Swiss move higher. But again, we've got a big double bottom right here. It's at basically 7,100 and some major resistance here at about 72.50, 60, 70 area. So I'm kind of just looking to get this area to break out. And again, if we get that breakout, that's where I'm interested in all this up here, right? Making moves from 72 to 74 to up into the 76s and so on. But I want to make sure that these lows are holding and this support is holding. But it's at a great area, it's at a great support, and it's definitely had a nice double bottom at that 10-year low. Looks like it's holding, right? We're just, again, trying to make sure, are the risk markets hanging in there or not? So nice little run there. Again, for those that are doing some shorter term trading and so on, look for runs down into the 7,100 and moves, back up into the 72 plus. Be ready for that. Look for that. All that good stuff. So be watching that. We do have a pending order. This one might have run away without us again. Aussie New Zealand. I like this trade so much, and we have a pending order that's kind of far away at this point. But I'm going to just leave it. I'm just going to leave it. Aussie New Zealand's getting a little bit overbought, I would say. And so I think it's probably ready to come, down just a bit. I definitely would not be shorting this one at all. I will not short it. I don't support anybody shorting it, but I think buying dips will be good. So we've got a weekly pivot here, missed pivots, big market imbalances down here at about 104, a couple of dailies in there as well. But those big market imbalances are what are kind of keeping my attention on Aussie New Zealand. So big market imbalance here at 105. 104. I just think that we are ready to see this thing work its way back down into the 104s, and we'll be ready to snatch it up and buy it there and scale in between 103 and 104 on Aussie New Zealand. So I really like this one, but this is really kind of range trading as well. If we go back to kind of the the slightly bigger picture, this has been bouncing, huge double bottom. And again, big long-term support down here. It's just been bouncing around kind of 103 and 107 for quite a while now. So we're just looking to get in as close to the dip as we can, and I think 104 is a great area for that. And scaling back in, scaling into that at 103. So 103, 104 should be good. So we'll leave that pending order at 104. We'll be ready for it, but it's definitely staying bullish and staying strong and looking good there. Aussie dollar, again, I like this. We don't have an official group trade here, but I do want to get one going, and I like Aussie dollar. I want to see, this move above 6,800-ish area, 68, 15, 20, and get this starting to work its way back up into this market imbalance here, which would take us, only 50, 60 pips, but then into the monthly pivot, into the weekly pivot, into some of these big areas here. So I really like the Aussie dollar across the board. I think it's great. But we need to make sure that the markets are ready, right? We don't want to rush these guys too much. So with like our existing Aussie Swiss trade, I want to make sure that, we've got some good confirmation. We'll look for some Aussie yen, Aussie Swiss, Aussie dollar, and be ready for that kind of movement there. Okay, questions, comments? What do you guys think about that? Euro pairs, going back to some more Aussie-ness here. Euro Aussie was one I was looking at and kind of keeping an eye on and seeing how it was trading against these highs. you know, I couldn't watch it as closely as I wanted to. You know, we did get some movement out of the Euro Aussie as it came upon those highs, but still, you know, it remains that the Euro Aussie is kind of holding this, you know, this big long-term resistance, right? So we've got this big long-term resistance, again, taking us back to 2009. And we had that little poke through, you know, little poke through on the wick there, and then nice bearish candles. So I think the Aussie, Euro Aussie is going to give us plenty of opportunity to kind of make a move like this. If the euro dollar, or excuse me, if the euro just, you know, decides it's not ready to rally and it's heading down, the Euro Aussie could be a great one to trade here. We've got, you know, awesome targets down below. There's a couple of consecutive missed weekly pivots, daily pivots, market imbalances galore. This is a great market imbalance right down here at 61.60. That's just a beautiful little area, and we've got a nice little chunk running through there with that weekly pivot. So, you know, it's taking out all the upper market imbalances, but the lowers have not been taken out yet. And so I think we're going to have a great opportunity to short the Euro Aussie. So I'm just looking for this to kind of run higher as much as it can, maybe give us a little bit more of a, you know, of a double top in this area here, and then just trade the heck out of this thing straight south. So I'll be looking for that as well. So I like Euro Aussie. I think that's awesome. The rest of the Euro pairs, you know, like I said, you know, Euro CAD's kind of a mess. You know, we'll watch this one. It, you know, it did break out of this area that we were watching pretty closely, made a nice run up, and it's kind of right back to that. So I'm a little bit curious on Euro CAD, but it's a real volatile one, and unless the setup is just so good, I really don't like to trade it. Euro Swiss should be interesting as well. So we talked about this Euro Swiss and kind of trading, you know, getting bullish against these lows. We're at 108 in, you know, just below 109, 108.80s here. This is an interesting support level. I'd really like to see Euro Swiss get down into the 106s. So another 200 pips lower, and we will, without a doubt, get long Euro Swiss. Right here, I think this is an interesting spot to be looking at, to be ready for. And you know, and we do have some pretty darn good targets back on this one as well. So we've got a couple of missed weekly pivots. It's been taking out the monthly pivots pretty well, but there's some weeklies. We've got some market imbalances kind of lurking in there. There's a monthly pivot. There's a couple of dailies. So it's, you know, it's not crazy on the targets, but it's interesting. It's interesting. And so, so I'm going to be watching this this Euro Swiss and looking for an opportunity to buy as low as possible. 108s are possible, but really into the 106s is where I want to see that one. And then New Zealand pairs. We'll talk about a couple of New Zealand pairs. Remember, you know, New Zealand dollar, Australian dollar is a risk-on trade, and we're not totally in a risk-on market right now. But that doesn't change the fact that this New Zealand CAD, for example, is at a really super cool, interesting area here. So nice double bottom at this low here of 84, you know, 80-ish area. So we're having some big reactions there. I'd really like to see the New Zealand CAD get down into that low, into that zone there, which is around 83 and change. So again, it's about 200 pips away. That would be the area where I'd say we have to trade this. There's, you know, my hands are tied. There's nothing I can do but trade it. So 83 kind of 50-ish area, and we may start to look for scale ins around 8,400. So it's not far away, 100 plus pips lower. So we could easily be looking at this trade this week. So 100 plus pips lower, and we'll be looking for some New Zealand CAD opportunities. Again, one of the reasons I like New Zealand CAD so much is all these targets. These are massive targets, like your market imbalances, missed pivots, all of that good stuff. So New Zealand CAD should be a good one for us indeed. Okay, so New Zealand CAD looks good. New Zealand Swiss, you know, I'm not looking to do so much on New Zealand Swiss at the moment. I think that we've got some things happening here on New Zealand Swiss that could get interesting down in that 6,000 area. So maybe another couple hundred pips lower, but not as interested in this one as I would be in New Zealand CAD, New Zealand yen, New Zealand dollar, so on. Speaking of New Zealand yen, again, if the market is ready to, to have some risk again, then New Zealand yen is at a super duper interesting point that we want to, pay pretty close attention to. So again, we're down, kind of running through this area here. So we've got this big resistance zone over here in kind of the high 60s, slash 70 area. And we've seen the New Zealand yen pushing through that just a little bit, kind of in the 68s. But there's still, really what I'm more interested in is this whole thing right here. So that's what I like. We've got this big support resistance zone, again, multi-year level. So that's where I want to be, looking for opportunities to get long New Zealand yen. But again, this is going to be a very, very cautious, careful trade. We've got some great targets, on this one, but this is a very risk-on kind of a trade, and like risk on to the max. So I want to make sure that we're really ready for this, that the market's really ready for this. Yeah, I like New Zealand yen a lot. We've got some great market imbalances, missed pivots, market imbalances, more missed pivots up above. So little dips down into this area look like they could give us, at the very least, some good shorter-term trades, and hopefully some bigger longer-term trades. So again, we get this thing running down 50, 60 pips, 70 pips. Let's buy a dip and see if we can grab 50 to 100 pips out of it and kind of take it from there. Okay, sound good on that? We've talked about New Zealand dollar, dollar Swiss, dollar CAD, some of these other ones. Dollar yen, again, we're kind of looking at what are these markets telling us? Again, couple of 2.5+ year low. How's the New Zealand, or how's the dollar yen going to behave? Probably one of my least favorite pairs to trade, but there could be something happening there. So, does everybody have a decent idea of what we're trying to do this week, this month, probably this year? I mean, this is almost like a January 1st kind of a webinar, right? I mean, I know I took a week off and I had a lot to say, but what we see happening here is we've got risk markets at big decision points, and I think we have major long-term movements coming from whatever is happening right now. So, our goal is going to be to get on board with those big long-term movements, number one. Number two, manage our positions, obviously, manage our risk, add to our existing positions. But I think we have huge things in the works. I mean, I don't think we do. I know we do, because we're at, as we've seen this picture, we're at major decision points across the board. So this is going to be like ultra important over the next little bit. So our goal will be, find some short-term trades in here, shorter-term trades, 50 to 100 pip trades, but really getting those big movements that I think are coming. So that is a good thing. That is a good thing. Yes, good to look at something besides the Aussie Swiss, for sure. Okay, questions, comments, guys? What else? That's all I have to say for this morning, so I'm happy to answer any questions, cover any comments, any of that stuff. But that's kind of the big picture of the market. So, make sense? Everyone on board? Anyone completely disagree with what I'm saying? I'd love to hear it. Thanks, Jim. Glad to be back. Glad to see you, my friend. Yeah, it is good to be back. That nice little week off was pretty darn fantastic. Okay, good, Graham. Excellent. So again, this is the big picture webinar. We're going to look for some short-term opportunities, from day to day, and so on. But the big picture stuff is looking pretty interesting and pretty clear. So we're just kind of waiting for that movement to happen. But good, guys. Okay, well, I'm super happy to be back with you guys. Great to spend a little bit of time on the webinar this morning. I hope all is well with everybody. I will get lots of charts. Remember, I'm going to post all the details here in the watch list. So this needs to be updated. Obviously, I didn't update the watch list while I was out of town last week. I'll update the watch list for this week. We have so much to look at, so much to do there. We'll be looking to add to positions. We'll be looking for everything. So questions, comments, guys, don't hesitate. Jump on Telegram, send me a message, jump into the group in Telegram, all of that stuff. I'll be happy to chat, happy to discuss. Thanks, guys. Great to see you all. Have a wonderful Monday, and good luck to you on everything. And we'll take it from there. Thanks, guys. Great to see you all. Updates and the video and everything will be posted shortly. Thanks, everyone. Take care.